Robinhood stock has had an incredible run over the past week, and now as we step into the Monday pre-market, all eyes are on whether that momentum can carry forward. After years of speculation, disappointment, and volatility, Robinhood is officially set to join the S&P 500, replacing Caesars Entertainment in the index later this month. That confirmation alone was enough to send the stock soaring last week, with one of its biggest single-day moves in months. On Monday, we'll see the first real pre-market action as traders and institutions position themselves ahead of the regular session. The big question for investors is simple: can Hood build on its rally, or is the stock due for a breather after such a massive run? Let's dig into the story, the numbers, the catalysts, and the outlook for the week ahead. Robinhood closed last Friday at around $101 and change, down about 1.5% for the day. But in the after hours, everything changed. The announcement dropped that Robinhood would be joining the S&P 500 effective September 22nd, and within minutes, the stock spiked more than 6%, climbing over $107. By the time the first regular session rolled around on Monday, that enthusiasm carried into a full-blown rally, with the stock exploding as much as 15% intraday before finishing strongly above the 100 teens. The pre-market now becomes the testing ground for whether this surge has more fuel. Pre-market sessions are often where institutions reposition ahead of the day, and where sentiment shows its hand before full market liquidity comes in. So far, Hood has held much of its gains, a sign that the move wasn't just a one-day fluke. Instead, it looks like investors see this as a fundamental shift in the story. Why does S&P inclusion matter so much? The answer is partly mechanical and partly psychological. Mechanically, every index fund and ETF that tracks the S&P 500 must now own Robinhood stock. We're talking about trillions of dollars globally, and while the actual flows into Hood will be in the billions, that's still a massive injection of demand. This passive buying creates a new base of shareholders who will hold the stock regardless of short-term swings. It's like locking in a steady layer of demand beneath the trading activity. Psychologically, it's about legitimacy. Robinhood has always been a polarizing company. On one hand, it democratized investing, bringing millions of retail traders into the market. On the other hand, it's been criticized for meme stock mania, outages during peak trading times, and even controversial revenue models like payment for order flow. But inclusion in the S&P 500 is a stamp of approval. It signals that Robinhood is no longer just a disruptor at the edges of finance, but a recognized player in the mainstream. For long-term shareholders, this is exactly the milestone they've been waiting for. Robinhood now sits alongside corporate titans like Apple, Microsoft, and JP Morgan. That kind of recognition opens the door to broader institutional ownership, analyst coverage, and legitimacy that Robinhood has struggled to secure in the past. Of course, while inclusion is a huge win, it doesn't eliminate risk. And that's where the cautious part of the cautiously bullish tone comes in. Robinhood's fundamentals are strong, but the stock is already richly valued. With a forward price-to-earnings ratio in the 40s, investors are paying up for growth. That means the company has to keep delivering quarter after quarter. Fortunately, the fundamentals so far support optimism. In the most recent quarter, Robinhood posted 42 cents in earnings per share on nearly $989 million in revenue. That's up 45% year over year, a tremendous growth rate for a company already of its scale. Assets under custody have reached $279 billion, funded accounts now sit at 26.5 million, and average revenue per user has climbed to $151. These aren't the numbers of a fad, they're the numbers of a company maturing into a financial powerhouse. And Robinhood isn't just relying on its core trading platform. The roadmap is ambitious. The Bitstamp acquisition gives it a foothold in international crypto markets, expanding its reach beyond the US. Tokenized stocks and ETFs in Europe are laying the foundation for 24/7 global trading, something no traditional brokerage has fully captured yet. Staking and futures add more diversification to the revenue model. These aren't just speculative experiments, they are calculated moves into high-growth areas of finance. At the same time, Robinhood continues to innovate on the product side. The company recently unveiled new features at its Hood Summit, including social trading tools, AI-powered indicators, and futures contracts, designed to keep its user base engaged and expand into professional-grade trading. These initiatives show that Robinhood isn't sitting still. It's broadening its platform to serve a wide spectrum of investors, from first-time traders to seasoned professionals. Still, there are risks. Crypto remains a double-edged sword. It's a key revenue driver, but it's also highly volatile. If Bitcoin or Ethereum enter another bearish stretch, Robinhood's transaction revenues could take a hit. Regulatory risk also looms large. Tokenization and crypto products operate in uncertain territory, and any sudden regulatory shift could create headwinds. And competition from established players like Fidelity and Schwab is intensifying. Robinhood has the edge on innovation, but larger players have deep pockets and entrenched client bases. So what should investors watch as we head into this Monday pre-market and the rest of the week? The first thing is price action. Robinhood has broken through resistance levels and is trading solidly above 110. The question is whether it can establish a new base there or whether profit-taking pulls it back closer to 105. Support at the $100 mark remains crucial. If that level holds, bulls will continue to have the upper hand. Second, watch the volume. The surge last week came with massive trading volume, a bullish confirmation. If volume stays elevated, it suggests strong institutional participation, not just retail excitement. Third, keep an eye on crypto markets. They've been relatively stable, but any major move in Bitcoin could spill over into Robinhood's price action. Fourth, analyst commentary. Index inclusion often prompts new price targets and coverage. Some analysts already see upside to $130, while consensus sits in the mid-90s. If more analysts revise higher, it could add momentum. And finally, macro factors. Interest rate signals from the Federal Reserve are a backdrop to everything. If the Fed leans toward cuts later this year, risk appetite could stay strong, and Robinhood as a high-growth fintech would benefit. The bottom line as we enter this Monday pre-market is this: Robinhood has momentum, it has catalysts, and it has a new narrative. The S&P 500 inclusion isn't just another headline, it's a transformative event that changes the company's standing in the market. For traders, this creates both opportunity and risk. Short-term volatility is guaranteed as funds reposition and as profit-taking ebbs and flows. But for long-term investors, this is the validation they've been waiting for. Cautious optimism is the right stance. The bullish case is compelling: inflows, legitimacy, strong fundamentals, and ambitious growth initiatives. But the risks are real. Valuation is high, crypto exposure adds volatility, and regulation is unpredictable. As the bell approaches, Robinhood is on center stage. The pre-market action will give us clues about whether the rally has legs, or whether we're in for a consolidation phase. Either way, the story has changed. Robinhood is no longer just an outsider fintech, it's now part of the S&P 500, and that's a milestone investors can't ignore.